All right, welcome back to QuickBooks Chapter 10, Payroll Setup. So if you're following along with me in the book, you need to open up PR Setup 21, okay? And so let's take a look at what are the necessary checklist steps in order for you to set up your payroll. Now, in this case, what we're looking here is setting up actually a manual payroll system. But this is also one that when you set this up and you do end up using a payroll service, right? It makes it a little more easier for you to go ahead and be able to collect whatever information you need to collect, but also it makes it that much more easier to manage your payroll system, okay? So we're going to go ahead and talk about what happens when you need to be on this checklist right here on page 292, okay? So, in this case, it's 320. So here you go. Payroll setup checklist, okay? Right, number one thing is you need to gather all the information about your employees, okay? And then so on and so forth. Then you have the rest of the 10 steps here, okay? Setting up your payroll items, so on and so forth, okay? Now, again, this book, right, I'm going to show you tomorrow, not tomorrow, but next week. When we do process payroll, I'm going to show you the difference of using a payroll service versus doing manual payroll, okay? But however, once again, when we're doing this payroll setup, we are essentially setting it up for a manual payroll system and also to help you save time if you do decide to use a payroll service, okay? But first off, before even starting again with step number 1, right, there's 10 steps in total, you do need a step 0, okay? And the step 0 is going to be listing out, first off, are you going to have employees? And if you are going to have employees, what benefits, deductions do you offer? So again, do you offer, right? Are you going to allow, how are they going to get paid? Are they going to be paid hourly or salary? Are they going to get special benefits such as Medicare, right? Are you going to provide medical insurance for your employees? Are you going to have a 401k retirement plan for your employees? Okay? Those things are 100% necessary for you to have in order for you to set up your checklist. Because if you don't know what you're going to be providing for your employees, you're going to be stuck on the payroll setup window for the longest time, just because you're not quite sure what you want to provide for your employees, okay? Now, here's the great thing about the payroll setup. You can always go back and add more to the payroll setup, okay? It's not like the easy step interview where once you complete it, you have to actually modify it by going through the edit preferences. In this case, you can always go back to the payroll interview and you can either set up more payroll items or you can, remove payroll items, okay? So that's the cool part about the payroll interview. So yes, in this case, we're going to go through a series of questions. And in this case, there's no other way that you can set up your payroll. All right. We are going to be using a payroll interview. Now, first off, let's go ahead and talk about what are the payroll accounts that you need, okay? And what are the items that you need to create, okay? Because in this case, when we talk about payroll accounts, right, we're talking about how are we going to be issuing our payroll? how are we going to be processing? So right here, payroll expenses, you got gross wages, you got payroll tax expense, you got employee benefits right here. These are your expenses, right? But in this case, not only, okay, do you have expenses to pay for your employees, you also are going to be collecting liabilities, okay? Because again, if you offer these benefits, if you offer that you're going to be matching your employees, you also need to have employee payroll liabilities, okay? Again, if you're collecting money from your employees to pay for medical insurance, right? You need to collect that money so you can pay for medical insurance, right? Especially if you're doing a Social Security or, that money isn't, that money's not yours, right? You're not the one that's going to be providing Social Security to your employees, okay? But you're going to be paying into the system, all right? And that system is you have to forward it to the federal government, okay? So it's very important that you do recognize that, okay? That's the basic standard ones that you should know, okay? Is that you will be obligated to pay into Social Security, federal income tax withholdings, and Social Security. That's the bare minimum. But any other extra benefits, such as 401k, Medicare, yada, 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 those are extra. Okay, those are extra benefits and extra deductions that you agree to have for your employees. So in this case, they already set up for me the liability accounts and the payroll expense accounts. So I am good there. Now, the next thing I'm going to show you is going to be your payroll items. Now, in this case, it is separate from your actual items and services because in this case, my items list is in regards to my sales process. My sales process has nothing to do with my payroll. So there is a separate list that you have to know, and that's going to be your payroll's items list. Okay? When I click on here, these are what have been already created for me. Okay? Because I selected that, yes, I have employees. So that means what's going to happen is it's going to automatically create these accounts, these items for me, right? Like federal unemployment tax, federal withholdings, Medicare and Social Security. Because these are the standard expenses and liabilities that you have to be responsible for when having employees. So again, anything extra is going to be something that you have to create on your own. Now, do you have to create it through here? Absolutely not. You could, but you're better off doing it through the interview. It's just much more easier. All right. But again, if you are a small company, go through the interview so you know what you're looking for and you know what kind of idea in regards to what you want to do with your employees, okay? Again, you can always go back to the interview, okay? But for most cases, if you don't necessarily need to, you can set up your payroll items this way as well, right? Manually through the items list. But I'm telling you right now, it's easier to just do it through the interview, right? So now that we went over through that, okay, now let's actually talk about the actual payroll items, okay? So again, in the next couple pages, it just gives you a rundown on what kind of benefits that you can offer for your employees, right? First one's earnings, right? Are you going to have salaries? Are you going to have wages, like hourly wages? And then you're going to have other payroll. So just this book lists, so then you have kind of generated like an idea of what is to come. Okay, you got federal tax items once again. What are they? okay? And you have calculating items based on, et cetera, based on this, okay? So make sure you go through that because, again, you may have a few questions of what kind of benefits and what categories they belong to. But, again, they are generalized. They don't tell you the exact ones, obviously. Like, they're not going to give you a list of, oh, here is how you set up 401k or anything like that. So make sure that you have a step 0, which is collecting the information that you need to have. Are you going to have employees? How are you going to pay them? What benefits you're going to be providing? Okay, that is step 0. Okay, because you have to remember that having employees is going to be a huge cost to your company because you have to be responsible for paying them every 2 weeks, right? Or every twice a month. So maybe on the 5th, on the 16th, and the end of the month, right? You have to be responsible to be able to afford to pay for your employees, right? They are your number 1 priority if you are going into business. Okay. So let's go ahead and talk about the payroll setup interview. Only one way and one way only, right? We're going to go ahead and go up to the employees tab, and you have the payroll setup. Okay. So again, you didn't have it on your home page. You didn't have it anywhere else except for your menu bar. Okay. And this is how I initiate my interview. Okay. So once you get to this window, okay, it's going to be broken down into 4 sections, okay? You got company setup, you got a company setup, then you have your employee setup, then you have taxes, and then you have year-to-date information, okay? So now all 3 sections are going to be in regards to pretty much setting up your entire payroll, okay? If for any reason that you need to skip a section, that's completely fine. They will allow you to come back to this section at any given time, okay? But there are 4 sections that you need to do in order to set up your payroll, okay? So let's start with the very first section, which is company setup, okay? So I'm going to go ahead and click continue, all right? So the first one I'm going to be doing is setting up how I'm going to pay my employees, okay? So I click continue. So first window I have here is going to ask me how do my employees earn their money? Am I going to have salary earnings? Am I going to have hourly wages? And am I going to offer bonuses and commissions? Okay, I'm going to say I do have bonuses and I do have commissions. And do I have tipped workers or do I have pieced workers? Okay? If you don't know what these extra earnings are, go ahead and visit irs.gov publication 15, and it will give you a list of every single payroll item, in this case, like a list of what you can do for your employees, right? How do you compensate them? What are the rules and regulations on compensating them? And what are the taxes that are involved with them? Okay, because it is very important that you do know. Because you're going to be offering salary earnings as well as, hourly wages, right? Especially when you have bonuses and commissions, those are 100% taxable, okay? Especially tipped workers, right? Here in Vegas, we have a bunch of tipped workers. Now, if you did not know this, okay, tipped workers actually do not need to be paid the minimum wage, right? They are the exception to that rule, okay? Because they can apply tips as part of their earnings. So again, because tips are recorded, tips are also taxed, okay? Now, depending on what company you're working at, sometimes they let you keep the tips without doing anything, right? And then that means they tax you at a higher rate because, they either pay you higher, right? But in this case, tipped people who get earnings through tips can be exception to the rule of below minimum wage. So that's a little fun fact there. And we live here in Vegas, so if you do have tipped workers, you have the choice to either record the tips as part of their income, or give them the minimum payment and then let them keep their tips. Okay, depending on what kind of job they do, you want to make sure that yes. Do you have a question?
Oh, sorry, I was speaking and I'm not hearing. Do you know when that started here in Vegas? Because I know that the whole tip situation didn't always exist. Because when I used to work for tips, it didn't exist back then, and now it does.
Well, I don't know the exact date, just because again, you probably find that answer through irs.gov/publication 15. Would give you every rundown about every single type of employee and what they can earn, how they get taxed, and so on and so forth. They might even have the history on that. But right now, that's as far as I know. It's a choice. You can count tips for part of your earnings, or if you fall below, or you choose to not count it against your tips, then you have to pay the minimum. So in this case, it is an option, because I know that there are individuals out there that are earning above minimum wage and they get to keep their tips without being taxed. Okay, but that's in here in Vegas, it's more likely the tips go for your earnings, depending on what your job is, right? If for example, cocktail waitresses, that 100% goes towards your paycheck. But if you're like a bellboy, that doesn't really go for it, right? It just depends on how much tips that you're going to be earning through the day. I think that's going to be what's going to tailor whether they count it for your part of your income, or they don't count it against it. But I don't know the history on that, but it's definitely something that I do notice that you should know that in here in Vegas, just because that's just the business of doing here. But if you do plan on creating a business, are they going to be tipped workers? That's going to be something that here in Vegas is very prevalent. Okay, but in this case, yes, it can go towards your part of your income, or it could not be counted. Okay, so again, I'm not going to have any tipped employees. I'm going to have just salary, hourly, and bonuses and commissions. Okay, and then once I select that earnings, I'm going to go ahead and click next. Okay, once you do that, the next question says, okay, are you going to do a dollar amount? So this is for in regards to the commissions. Is it going to be based on a dollar amount, or are you going to do a percentage? In this case, it's going to be a percentage. Okay, right? Usually it's like 10% of sales. It's not a flat rate. Okay, and I'm going to go ahead and click finish. So once you've done that, then you have this list right here, and you're going to notice that you're going to have things like overtime, double time, right? Those are things that do go towards a paycheck. So how do I adjust this, or how do I modify it? Well, in your book, gives you instructions on which items to keep and which items to delete. Okay, so in this case, you don't offer double time. So I can go ahead and remove that. So here I have the options to either add a new item, edit, or delete. So in this case, I'm going to delete it. Okay. I don't offer overtime. I can delete that. Okay. So again, here are my 4 that I do offer. I do offer hourly, salary, bonuses, and commissions. Now in this case, what's going to happen is I'm going to now edit this information. So I'm going to go ahead and start off with my hourly. Okay. I'm going to edit this information, and now it's going to give me what I need to do. So in this case, I'm not going to call this hourly. I'm going to call this hourly regular. Okay, because they are my regular employees. Now, if you guys, go to irs.gov, there are different types of employees that you can have. Okay, the only 2 that fall under your actual payroll system is going to be statutory or common law, right? And common law and statutory employees. Okay, those are the only 2 that's going to be actually on your payroll list. Again, regular employees is your standard 8 to 5. You tell them exactly what to do, so on and so forth. Statutory employees, they work for you, right? You provide for them everything that you need, but the only difference is you schedule them to do a job, and they just have to complete it within that day. They don't tell you the exact time when they have to clock in. They only are there every once in a while. They're not there every day, and so on and so forth, right? Whereas a regular common law employee, right, you're given an exact date, an exact time, an exact location that they have to clock in every single time. And the huge thing about common law employees is that you are given the task and telling them what to do, so you have 100% full control. Now, in this case, an example for a statutory employee is going to be a truck delivery person, right? Their only task is to go pick up stuff from the store and deliver it to your store. Now, can you tell them exactly when to do it? You can give them a date. Can you tell them what time? Not necessarily. Can you predict how long it's going to take? Absolutely not. You are giving them the task to go pick up and deliver my stuff. And do you need them every single day? No. Okay? But in this case, you do have full control of what the employee does. The only option is it can't be predicted. All right? So that's just the difference there. And that's what you need to associate here, is that this is my regular common law worker. Okay? And it's an active item. Okay? Now, is it going to be an expense item? What kind of expense does it belong to? And this is where you need to set it up. Okay? And it's going to be under payroll expenses gross wages. Okay? Once I have that, I can go ahead and click finish. So that's that one. Now I need to set up my salary. Okay? Salary is going to be also salary regular. Okay? Active. Okay? And then they too are going to also belong to the payroll expense gross wages. Okay? And then now we got bonuses, right? Bonuses, you can leave the title just exactly the way it is, but it is going to also go towards gross wages. Okay. Now the last one, right? Commissions is actually going to give you an extra window. Okay. We just leave commissions alone. All right. Expense, and it's going to be a payroll expense. Yes, but I want to categorize it as a way that you can earn money. So it's going to be a gross wage. Now again, because commissions, right? You need to tell QuickBooks how a individual can be collecting commissions, right? Is it based on a percentage, or is it based on a flat rate? So in this case, do you need to set up a default rate or amount? So in this case, is it a default rate or amount? In this case, I'm going to say it is 10% or whatever, 20%, 40%, whatever that you agree on, right? I'm going to say they can earn up to 10% for commissions. That means everybody gets the equal opportunity to earn 10% commissions. Okay? And then I can go ahead and click finish. Because the question when it first popped up was, how are you going to be, how are you going to be collecting or giving the individual commissions? And we said it was based on a percentage, right? We didn't say it was a flat rate. Okay? So in this case, now it told me, well, do you want to set up a rate? In this case, I set up 10%. So that is going to be how we compensate our employees. Okay? All right? Any questions there?
No.
Okay. That's not all for the whole entire setup for for company, right? We still got to talk about what are the benefits? What are the extra deductions? Are you going to have Medicare? Are you going to have a retirement? Okay, so that's the next section here. So I go ahead and click continue, and then it's going to give you this. So now let's talk about Medicare. Okay, there we go. So, are you going to offer health insurance? Okay, and if you do, then go ahead and select the following options that you want to provide. If you do not, you have the very first one saying my company does not offer health insurance. And in this case, we do offer health insurance, okay? But it does not include dental, vision, or, any of those extra ones that you have here. Now again, if you do provide it, here are the other options that you could do. Now in this case, they only offer you standard, health insurance options, okay? They don't necessarily, if you want to create your own, you can absolutely do that if you don't see what's on here on the list. But usually these are, normal standard ones that you commonly see for a typical business that does offer it. So in this case, I'm only going to strictly offer only health insurance. Okay? I'm not going to have vision or dental. I'm not going to have any health savings account. Okay? I'm not going to have any medical care. Okay? And so on and so forth. Okay? So in this case, if you don't know what these are, they do have a little explain little window here. If you click on it, it will pop up a little window just to let you know what that does, what kind of medical or health insurance, in this case, what it does and how does it help your employee and so on and so forth. So it does give you a little rundown if you don't know what any of these items are. So again, if you are doing this and not knowing a clue of what to do for your employees, yes, you can sit here and you can go through all of these and, take your time. But once again, if you don't know what you want to provide for your employees, then don't bother. Just skip this section, and you can always come back to it later, right? Because you don't want to be stuck in the middle of your interview and then leave. But again, if you do end up leaving in the middle of it, you can finish it later. As you can see right here, they have a finish later button. Okay? But in this case, I'm going to provide health insurance. So I'm going to click next. Now it's going to ask me, well, does the company pay for all of it? Or are you going to have both employees and companies pay for it? Or are you going to have the employee pay for it? Typically, most companies are always going to do half and half. Okay. I have seen some companies who do pay for all of it. But in most cases, in most cases, generally, you always typically have the company and the employee pay for it. That's why when you enroll some of your employees, right, they have to take a portion of their paycheck that to go towards the actual insurance. And usually with those kind of insurances, when they do go to the doctor's office, right, even though they charge their insurance, there's always going to be a deductible. Okay, meaning that sometimes you have to pay, a small service fee every time you visit the doctor or something like that. So usually, if that's the case, then yes, that means the company and the employee pay for both of it. Now, for any reason that the company pays for it 100%, you don't have any deductible. Okay. But if you pay it 100%, there are different payment plans out there that, if you buy the smaller one, then you're going to obviously have to pay the deductible. But if you pay the most expensive one, you can be exempt for that deductible. So it just depends on what you're offering. But in this case, yes, a company can provide insurances that you can buy, but they don't necessarily have to pay for it. So it's optional. But most cases, you definitely want to ensure that, the company is taking care of their employees. So in this case, if you can afford it, then go ahead and say, I'll pay half, and then you pay the other half. Okay. Now, because I selected this, all of a sudden I get this drop down question here, and it says, is employees portion deductible before or after taxes? Always before. Okay, I've never seen the deduction taken after taxes. It's usually always before. Okay. And in this case, I believe your book also says that it's going to be before taxes. But again, it's optional to you. I normally see it for many companies that it's usually deducted before you get taxed, but sometimes it's always done afterwards, depending on, maybe they want to tax you first, and then whatever leftover money from your net wages, they'll take away to be put part of your insurance. Okay, so in this case, that is the medical insurance. So in this case, let's see what it says here. Let me see. Employee benefits, health insurance. It's usually deducted after taxes. Okay, so this one wants to do after taxes. Okay. Oh, well, no, it was already automatically there after taxes. Okay. So that's that right there. And then I'm going to go ahead and click next. Now it's asking me to set up my health insurance again. Companies can provide multiple insurances. So it's going to be based on what kind of plan that they choose individually. So in this case, you cannot generalize unless you only offer one type of medical insurances. But in most cases, any company would usually have at least 2 or 3 medical, for example, medical groups. You can have an HMO, you can have an HPP, right, or a PPO. Whatever health insurance that you provide, right, is going to be what you're going to put in here. But in most cases, a lot of companies do have multiple health insurances that the employee can choose. So in this case, I'm going to leave it and say I don't need a regular payment schedule. Okay? And I'm going to click finish. Okay. So now you have 2 insurances, one for this and one for that. And what I'm going to do is I'm actually going to, let's see. My book says I'm going to delete the company health insurance. Okay, so company health insurance. And I'm going to keep this one, the coverage one. Okay. Now let's go ahead and modify this. So we're gonna change the account. Okay, we're gonna change the name health insurance to medical insurance. Okay, it is an active item. Okay, track expense by job. No, you don't necessarily need that. Okay, unless the job has a particular, if it's construction, you should definitely track this job because, again, every job can have a specific level of danger. So in this case, if you are, they have a little explain here. If you need to track the insurance by job, you should definitely do that if it's something in the industry of like construction where it's a very dangerous kind of job. Okay. Next, so then now it's going to ask me what group. Again, I'm going to skip this because it's going to be different depending on my insurance provider or who is going to be the healthcare provider. Okay, so then now we have here the liability account. What is going to be the account type? It's a liability, and what is it going to be? Right now it's under payroll liabilities, but what I want to do is I want to change this account to expenses. Okay, I don't want it to be a liability. It's going to be an expense account, and I'm going to label this as health insurance expense or insurance expense. I have to locate that. Insurance expense. You got liability, you got health insurance, right? That's what we want. Insurance expense, health insurance. Okay. And I'm going to go ahead and click next. Or, yeah, next. So then it's going to ask me, do I want to use standard taxes or do I want to actually customize it? In this case, if you don't know anything about tax, your recommendation is just use anything standard. Everything and anything standard. But if you are a tax accountant, then you're going to know the rules and regulations again on what taxes that you can deduct and so on and so forth. But in this case, best recommendation for you to do is just be safe and use standard taxes. Okay. And click next. So then now it's asking me how, okay, tell us how to calculate the amount. So in this case, it's going to give me, well, how much am I going to calculate? Do I do it every year? Do I do it later for the for when you enter an amount? In this case, I wanted to do it based on the I want to do it every per month. So in this case, per month. Oh wait, okay. It's gonna be. Let me see. What did I put in here? It's gonna be do not calculate. All right, and we're going to calculate. We do not calculate it, and it's going to be default rate or amount is going to be $100. Right, that's the deduction that I'm going to be taking out from my paycheck. From every employee's paycheck is about $100. And again, is it going to be an annual thing? No, it's going to be every month. Okay. Is there a limit? Again, do you have a limit that you want to provide for your employees? What can they do? So again, it says do not calculate, and it's going to be 100% per month. And then to restart, okay, there is no limit here. For medical insurance, I thought there is. Let me see. Limit. Let me look in your book real quick. There should be a limit on how much you should be able to collect from the employee to put into. I went too far. Let's see. So that's okay. So in this case, for medical insurance, no, there is no limit on what you can do. So 0 limit there, because in this case, medical insurance can as long as you work there, you can put in as much as you want in there. Okay, and I'm gonna go ahead and click finish. Okay, and that is it there. Okay, so that's setting up my medical insurance. Okay. All right. So next section I have here is going to be benefits. Okay, whether it's a retirement benefit, whether it is a fringe benefit. Okay, this is what you're going to set it up. Now in this case, what we're going to be focusing more on is going to be any retirement plans that you want to have for your employees. Now in this case, standard one and the most common one that you normally see is a 401k plan. Okay, that's the most popular type of 401k plans. Okay. You can also have other ones such as a, this is right here, you can do a simple IRA. I'm going to tell you this, I've never seen a company offer an IRA. An IRA is an individual retirement agency. Now in this case, I've never seen a company provide this. Usually this is on your own. You go to the bank yourself and open up an IRA, okay? Like I said, I've never seen a company provide an IRA before. Usually it's always either the common one, which is a 401k plan. As far as the other plans, you can take a look into what they do, okay? But again, the most common one and the popular one is 401k. Now, if you don't offer it, fine. That's fine too. You don't necessarily have to have a 401k plan if you cannot afford it. Because again, when you do have a 401k plan, you have to agree to match whatever percentage that your employee is going to put in there, right? It's the purpose of providing a 401k plan is your helping the employee save money, but by doing so, you also agree to say, hey, I'll put in a portion of the money in there as well to help you save for retirement for the future. Okay. So in this case, let's go ahead and set up our 401k plan. Okay, and I'm going to go ahead and click next. So once again, you're going to get this window here. We're going to go ahead and just skip this forward once again and finish. So now you have 2 401k plans. Okay, so you have one for the company and one for the employee. Now, it says here the company match and then you have employee. We're going to change those names so they're not going to look like this, okay? So let's go ahead and set up each item here. So 401k plan, let's go ahead and do 401k plan company, and we're going to name it match 401k, okay? So again, we're going to name this match 401k, right? You can choose whatever name that you want to do it. It is an active item. And I'm going to click next. Now it's going to ask me who is going to be my payroll for the vendor that I'm going to be paying. In this case, you are going to be actually paying into Merrill Lynch. Okay? Merrill Lynch is a company. Okay? There you go, Merrill Lynch. Okay? Now, do they have an account number? In this case, Merrill Lynch has the account number 99-1234567 Okay? So again, it's a company, so you would use their tax ID number. So Merrill Lynch is going to be the individual that you or the company that you are using to provide 401k plans. Okay? So once you've done that, now it's asking you, do I want to schedule a payment? In this case, no, I do not want to schedule a payment. Okay. And I'm going to go ahead and click next. Now it's going to ask me to set up my accounts. So in this case, you have an expense account. Okay. And the expense account is going to be payroll expenses, employees, benefits. Okay. Payroll expense, employee benefits. Where is that? Employee benefits right here. Okay. And of course, you're also going to be linking my liability account to payroll liabilities, other payroll liabilities. So in this case, other payroll liabilities. Okay. Now again, all these accounts you're supposed to have ahead of time. Okay, right? We can set that up anytime, but if for any reason that you don't have it, unfortunately, you need to have it beforehand. You can't just quick add anything in here. So you do need to have those necessary for you to link to your accounts. Okay, and I'm going to click next. So now it's going to ask me, what do you want to use? We're going to use standard. Okay, so now here's the question. This is what the company is going to be matching the employee. Now, in this case, usually whatever the agreement terms is, it could be dollar for dollar, or it could be based on a percentage of the paycheck. So in this case, that's exactly what we're going to do. It's going to be based on a percentage of the paycheck. So in this case, we are going to use it as a percentage. Okay, so we're going to calculate it as a percentage. Okay, and what is that default rate? It's going to be for the company to match you. It's going to be 2%. Okay, they're going to match 2% of whatever the employee's paycheck is, right? Because again, this is what the company is going to be paying into. Now, again, whatever agreement terms that you do offer, whether it's dollar for dollar, or if this person puts in, 5%, are you going to provide half of it? Okay. Okay, as a percentage of pay, 2%, it's going to be every annual, and the limit here is going to be 5,500. So again, actual limit to restart every year. What's the actual limit? $5,500. Okay. And I'm going to go ahead and click finish. Okay. Now I'm going to go ahead and set up my employees 401k. So in this case, you're going to call this 401k deduction. So this is setting up your employees section of their part in their 401k. So again, who is the company? Merrill Lynch. Okay. 99-1234567 All right, don't schedule one. Next. Okay. what is going to be the liability account. Once again, it's going to be your other payroll liabilities. Okay. Next, use standard. And then what is the portion that's going to be calculated off the paycheck? In this case, it's going to be a percentage of the paycheck, and it's going to be up to 4%. So in this case, they only match you 50%. So if you put in 4% of your paycheck in there, they put in half of that. Okay, and it's going to be an actual limit here. It's going to restart every year. Okay, and that actual limit is going to be it's going to be 60,500. Okay. So, all right, once everything looks good, okay, then we can go ahead and save and finish this. So now I finished setting up my 401k. All right. Any other benefits that you're going to go through, once again, it's going to be subjective now. You don't set up your other benefits here because right now we're just focusing on just the criteria. So the first one is, do you offer a retirement plan? Okay. Other benefits, there'll be a section for it. Okay. So there you go. Once I set up my 401k plan, I can go ahead and click on the next thing. Okay. And click continue. So once I continue on, now I have the next question, which is going to be setting up paid time off. Do I offer PTO? Some companies do, some companies don't, right? And if you do offer PTO, are you going to do paid vacation or paid sick time? In this case, you offer paid vacation. Okay? And I'm going to click next. Okay. So here you have two of them, right? You got hourly vacation, you got salary vacation. In this case, you don't offer it to your hourly wages. You only offer it to your salary. Okay. Yes. So in this case, I only offer it to my salary people who work for me as a salary based. Okay. I'm going to leave it the way it is. Salary vacation. Okay. It is an expense account, and this expense account is going to go towards their gross wages, right? Because they get to earn it. Okay. Finish, and that's it. All right. So now we're going to talk about setting up and any additional deductions here. So what are these extra deductions that you can have here? All right. You can also take money away if you need a cash advance, anything like such as taxable fringe benefits. So again, if you offer, so this is where all your other, additional benefits and other deductions, this is where you're going to put them all here. Now again, if you offer fringe benefits, what are fringe benefits? Fringe benefits is where you pay into the company, and by paying into the company, they're going to be giving you a whole bunch of benefits. So, for example, this is a photography type of company, right? Maybe they get tickets to the Met Gala, right, for them to take photos at, right? And again, that's where they can get the most, work done, but they get the opportunity to go to there. If they do get that opportunity to go there, right, it becomes a fringe benefit because maybe either the company can say, hey, I want you to do a job and you get to go to the Met Gala for free. Or they could say, I can give you a discounted price on the tickets, right? That's a fringe benefit, okay? So a great example for example, if you are part of AT&T, right? Or so a company like Quest Diagnostics, right? You get benefits from AT&T. You get benefits from AAA. You get benefits from this. Those are all going to be considered fringe benefits. It's because the company is part of a bigger organization or they get sponsored by these organizations. So because of the relationship that they have with those, they offer fringe benefits. So in this case, those are benefits that, yes, your company can provide for you. But yes, you do have to pay a small portion of your money because you want to become, you get those benefits. And a lot of those benefits are taxable. Okay. Other things that you can have here is, again, if you have wage garnishments, okay? So again, if you have besides, regular tips, commissions, and bonuses, right? What if you have extra, opportunities to do like a small section in your department, right? You could get paid, right? Or small projects that you could get paid on top of what you're already earning, okay? And of course, you could even have deductions such as donations to charity, right? Okay. And so on and so forth. So again, any union costs too, again, that comes out of your paycheck, right? So these are extra benefits and deductions that you could have. So whether it is applicable to you, okay, then go ahead and set it up. But in this case, none of them are, so I'm not going to select any of them. And I'm going to go ahead and proceed forward. Okay. So now I completed my entire company section. Okay. So then now the next section I need to do is put in my employees. Okay. So any questions in regards to company setup?
No.
Okay. So again, if you don't have these information that you need to have, you're going to be spending hours on these windows, because if you're not quite sure what you want to do and you're trying to figure it out for yourself, again, that's why step 0 is so important, because if you don't know how you're going to pay your employees, you don't know what kind of benefits you're going to offer them, well, there you go, right? And like I said, I mentioned this, right? Go to irs.gov publication 15. It'll give you an idea of what kind of employees that you want, how you're going to pay them, and what tax deductions and things like that you're eligible for those cases. Okay? All right. So again, already that took up a lot of time. All right. So the next section now is going to be setting up your employees. Now, before setting up your employees, that's step number 1, right? You need to collect all the information on that employee. So social security cards if they have it, green cards if they're not an American citizen, maybe a birth certificate for, to prove that they are, naturalized, right? Things like an actual ID, identification card, or a driver's license, right? And then lastly, you need their W-4 form, right? Because you're also going to be setting up on how they're going to get taxed as well, okay? Every individual is going to have a different W-4 form, right? Because every individual, if they want to claim taxes, right? Tax deductions, right? I'm married, right? That's a tax deduction, okay? I have 2 kids. Those are 2 tax deductions right there. Those are, that's a situation is that every single individual that applies for a job is going to be obligated to fill out a W-4 form, okay? And those W-4 forms are going to be tax deductions from their actual paycheck. And yes, okay, so it's important that you collect all of those information before setting up an employee. Now, in this case, let's go ahead and set up our first employee, okay? So here we go. We're going to set up our first employee, okay? Now, what is this employee's name, okay? In this case, first name is going to be Katie, okay? So K-T-I. And what is her last name? It's going to be Reynolds. So Ray Reynolds, okay? Now, in this case, what's the difference between a first name, last name, and a birth on the actual check or the actual certification. In this case, right, what if Katie is just a nickname, right? Is what you call her, right? What if her real name is actually Caitlin? Then you're going to put in Caitlin because, again, writing a full name on the check is going to be for sure going to be something that you have to do. It is a legal responsibility. So Caitlin, okay? So it's Caitlin Reynolds, okay? But you refer her as Katie. You cannot write on the check Katie Reynolds because, again, with the Bank Institute, it's not going to work, right? Because it's technically not a legal name. It's just a name that they want to use, okay? It has to be the legal name, the legal documented name, because it's going to go to the IRS, right? As well as it has to be legitimatized in the actual Bank Institute. So if the names do not match on the check and the person, this check is not going to be valid. Okay. Next one is going to be employee status. They are active. Okay. Now, in this case, do you need to record for any reason, do you need to record any inactive employees? Yes, if they worked for you in that year. Okay? Now, if they have not worked for you in, let's say, 5 years, it is unnecessary for you to have to put them into the system. Okay? Why is it that it's important to put them in the system if they worked for you for this year, but they didn't work for you last year? It's all because of the whole taxes, okay? So if you had somebody work for you for this year and they quit or they left for any reason, you need to make sure that the numbers for filing for taxes, right, that you paid the employee for this amount of money, right, matches up, okay? Because you're responsible to provide a W-2 form for that individual unless stated otherwise, okay? So in this case, it is only important if they worked for you that current year. But if they haven't worked for you, no. Right? You're not obligated to put it in active employee. So in this case, yes, this employee is active, right? So let's go ahead and enter in the contact information. So what is her address? Okay. So in this case, she actually lives, okay? So employee setup, her address is going to be, she lives on 432 Enos Lane. 432 Enos Lane. Okay. Where? What city? Danville. Now in this case, why is it so important that they have to have an actual legitimate address? Okay? Why do you think so? What's so important about having an actual address? It's required. You see those red stars there? It's required that you enter in an address. What's so important about having an address?
Because of mail?
Not just because of mail.
For proper identification purposes.
What do you mean by that?
Like for example, a driver's license should have the correct address.
Okay. Yes,
State
but
ID.
what is so significant about having an address?
Fraud?
Not fraud. Okay. So in this case, I'll go ahead and let you go. I'll go ahead and answer it for you. It's for tax purposes. We need a legitimate residential address because we need to know, are we taxing them at California or out of state? Now, in this case, if you do not know this, whatever state that you reside in is going to be what you're going to be taxed at for your federal, state, and all that jazz kind of ordeal, right? Especially for the state, okay? Now, if you are an out-of-state worker, right? Again, if I live in California but I work in the state of Nevada, I'm going to be charged the state of California because I reside there. Okay? That's the most important thing why you have to have an address, because it's going to be tailored. It's going to be how you properly tax them. Not because you need to send mail to them, not because you need it for any other purposes, but it's because of the state districts and so on and so forth, right? They have to properly tax you for whatever state that you reside in. Even if you're a temporary worker, right? Now, there are cases where, yes, you can have dual, dual residency, right? You can have one in California and you can have one in another state, right? A lot of celebrities do that. Okay? Now, that's the issue, is which state are they going to file taxes for? Now, oftentimes especially when a individual works in another state, sometimes they go ahead and say, well, because you're only doing this for one night, I'll pay you for this state tax, okay? But by law, by the IRS, they go based on your residency. So if you lived in California longer than you lived in, Arizona, then you're going to be taxed at the California state rates, okay? So that's the most significant thing about having an address, is it's for proof of what state you're doing residency in. And because if you are, by adding this in here, QuickBooks is automatically going to pull up all the information for this particular employee, okay? Because they are out of state, okay? So it's going to be slightly different, and QuickBooks is smart enough because they take all the information for that particular state, and then they go ahead and apply it for this individual. Okay, so in this case, this company is a California company, so is this employee is from California. Okay, and yeah, I can go ahead and click next. So now it's going to be saying, well, how am I going to pay my employee and what kind of type are they? In this case, they are a regular worker. Okay. Okay. What is their Social Security? So again, Social Security is a means for you to go ahead and either put in the benefits for the Social Security, but also to file taxes. So you could provide a W-2 form for them. Okay. So in this case, my employee Social Security number is 333-222-4321. Oh, I put too many numbers. 4321. Okay. And what is their hire date? Okay. In this case, it is written here that we hired this individual on April 1st of 2008. So April 1st of 2008. Okay. And then release date, she's still working with us. So in this case, we don't need a release date. Now again, next is birth date. What is so significant about a birth date? Why do you need to have a birth date?
It's unique to each individual.
Say that again? It's unique to the individual?
It's kind of like unique, like my birthday is my birthday. It could be the same as somebody else, but it's like a second step or third step of verification of who you are for IRS purposes or what may be.
Yes and no. Now, is there a law for working?
No.
Yes, you have to be legal of age for you to work. Now, yes, so that's why it's important that you have a birth date. It's not just so that the office can know it's your birthday. It's so then when you do run through the system and you check the Social Security, it does match, but also it's also for legal purposes. Because if you hire somebody who's only 14, you can only be legal to let them work for, I believe, the minimum of 4 hours. Okay? It might be less than that, especially if you're 14. I think you can work at 14, but I think 16 is the minimum with a parent, guardian, signing off for that. But yes, 18, you're legally to work a full time, and then of course beyond that, right? So you need to be legal of age in order for you to work. So that's exactly what a birth date does. And her birthday is going to be, let's see, birthday is January 31st, 1973. Okay, gender. They only give you 2 options, okay? So again, if you do not want to reveal your gender, you don't have to. So you don't have to select whether you fit in as a female or a male. You can just leave this blank. It's not required for you to have this, okay? But in this case, Katie is okay with letting us know that she's a female. Okay, but yes, that is going to be under one of the privacy acts there that you don't have to reveal your age if you choose not to. However, the purpose of this is nothing for more or less except for statistics. Okay, especially for corporations, right? What is the number of employees that are male compared to female, right? Especially if you look into IT, right? That is generally a male populated type of industry, right? You're most likely to have a male do a job in IT, right? And then the percentage of women is very low. So this is just a means to collect data to put into statistics and so on and so forth. It's saying that this company has X amount of females and X amount of males in it. So then the job opportunity can be like, well, I'm a female, I'd like to be in the IT department. Then you're more likely to be hired over a male because of that statistic section, right? So again, that's all that this is. This isn't to, identify you in any means, okay? But in this case, she says it's okay to go ahead and identify her as female, right? Next, so now the next section is going to be, tell us how you plan to pay Katie Reynolds. So in this case, we're going to pay her as, so what is her pay frequency? So in this case, right, you can pay her every day. You can pay her every week. You can pay her every other week. Usually the more common ones that you normally see nowadays is weekly and or bi-weekly and semi-monthly. Okay, those are the 2 common ones. You pay every other week or every 2 weeks you get a paycheck. Or you could pay every 16 and every 30 to 31st of the month. Okay? With those are the more common ones. Now again, yes, you can pay daily, right? Again, an example would be Uber, right? Uber, you can collect your earnings at the end of the day, every day. All right? Weekly ones, if you're an independent contractor, right? Most likely you're going to be paid on the weekly. You're not going to be paid every 2 weeks like everybody else. You're going to be paid every week. All right? Other things like government issuance, right? If you're receiving benefits from the government, it's commonly paid every single month, right? And so on and so forth. But in this case, we're going to go ahead because she's a salary-based earnings. Usually, anybody that's a salary earnings is every twice a month. So it's usually semi-monthly. Okay. Now, how are you going to, what is she going to be compensated as? She's going to be compensated as salary. Okay. And then next thing here is salary amount. She earns $60,000 $1,000 a year. Okay, so make sure that it is a year. Okay. And is there any other extra things here? I'm going to say no. Okay, percentage of commissions. Oh, yes, she does get commissions. Okay. Is there a percentage of commissions? Once again, it should be 10%. I don't know. It's not showing up. Okay. Next. Okay. So now we're going to talk about what the benefits that we offer. So again, we offer a 401k plan, right? And we offer medical insurance. So in this case, what are the amounts that are going to be in here? So again, the deductions and the amounts, usually this whole section should be 0, right? But what are the limitations? Again, 401k deduction is going to be the 16,500. Okay, medical, there's no cap for that one, and then 401k is going to be the 5500. Okay, and then this one is 0. But medical, how much is the deduction amount for? Well, it is for the amount of $100 per paycheck. Okay, so set that up. Okay, okay, and go ahead and click next. Right? So then now the next section is going to be asking, how is vacation going to be administered? Okay, or in this case, how can she claim her vacation? Well, in this case, what is the maximum amount of like a maximum of hours that Katie can earn in regards to vacation hours? Okay. And in this case, PTO, okay? It should be different from each, it's going to be actually different from the book. In this case, she earns 80 hours total. So that's the amount that she can claim is 80 hours. And it said it's going to be the beginning of the year. You could do per paycheck or per hour worked. In this case, no. It's just for the beginning of the year, okay? And let's see here. Okay. You actually have a limit. Okay. And does it increase without any limits? No, we actually have an actual limit. Okay. And what is the maximum hours that this individual can claim? Maximum is 200 hours. Okay? And is it going to be time off currently, right? Are they currently having time off right now? Time off currently, yes. Okay? And is there a balance on there? So down below, is there a current balance right now since we're entering in Katie for the first time? No, there is no account balance or how many hours she's already claimed. Okay, so in this case, I can go ahead and click next. Okay. So once we get there, now it's going to ask me to set up Katie Reynolds direct deposit. Do you offer direct deposit? Now, in this case, it's also dependent on number one, the company, but number two, is there even enough employees for you to go ahead and do direct deposit? Now, direct deposit, yes, you have to pay for this service, okay? It doesn't come free with your bank, all right? Because you have to go to the bank, you have to set up their accounts, you have to ensure that the money is going to be transferred from your bank account to their actual account. So again, it's technically not free. And if you don't have enough employees, it's not worth the cost. But if you are a corporation, you have a lot of money, then go ahead and do it. But in this case, no, she does not need a direct deposit. So in this case, I'm going to skip over this. Okay. So then now it says, okay, Katie Reynolds, okay, we are going to tell us when Katie Reynolds is subjected to taxes. So let's take a look here. Okay. So in this case, because she's in the state of California, yes, she's going to be taxed at the state of California. State subject to to employment is going to be California, because she's currently working in California. Okay. Oop, wrong one. Up one. There you go. California. Now the question asks here, okay, while working for your company in 2020, did Katie Reynolds live or work in another state? So again, this is coming back to the question here. Why is it significant for you to enter in her address? It's because of residency. So in this case, right, she can give me a temporary address that she currently is residing in, I don't know, here in Vegas, right? But that's not her residency. You have to give the actual residency address so you can properly file taxes. So the question here is, did she work out of state? In this case, no, she didn't. Okay? And I can go ahead and click next. So then now it's going to be asking information that you must collect from the W-4 form. Okay? The W-4 form is very important because it allows you to, right, tell the employer what taxes that you want to withhold and what taxes you actually want to deduct. Okay, so again, if you're a homeowner, you can take a tax write-off right there, or you can do a tax withholding right there. You have children or dependents, they also go, you can withhold money from there as well. Okay, so in this case, this is information that you need necessary to have on your W-4 form in order for you to be able to proceed with the next step questions. Now, in this case, because right now we are currently in the year 2020, okay, you have to choose between the W-2 forms, because right now there is, the W-4 form for 2018 or 2019 and prior, and then there's the new W-4 form for 2020 and later. Okay, now it depends on which one it is. In this case, she's been in the business with us since 2008. Nothing has changed. So in this case, we're going to be using the W-4 form for 2019 and prior, which is going to be a lot more simple than it's definitely going to be a lot more simple than your 2020 form. But let's take a look at 2020 form, right? It's going to give you this pop-up window, and I'm going to click OK. So now it kind of changes the format because your W-4 form for 2020 is a lot more extensive. So now if you apply for a job, you do have to apply for the new W-4 form. So unfortunately, you need to have information such as extra earnings. Do you have a secondary job? If you do, it's going to go against your taxes. If you have, if you need to claim dependents, they're not considered one withholding anymore. They're considered $2,000 per year. If it's a dependent that's older than 17, $500 per year. Okay, and it's also going to go against if you have any stocks, any savings, any bonds like that. They're looking at your overall amount of income that you earned, and including if you're married and you filed together, they also include your spouse's income as well. So in this case, definitely the new W-4 forms are definitely, for surely 100% more detailed and very restrictive. So you definitely want to make sure that you do make sure that what W-4 form that they're filing for. In this case, it's going to be the 2019 and earlier, just because this individual's been working for us for a while and nothing has changed. So again, it's not necessary for you to have to change your W-4 form unless there is a significant change in your life, and or if you need to withhold your taxes and claim more money. Okay. So here you go. It's 2019 federal taxes. Okay, so she is married status. So once again, that is a withholding. Okay. Number of allowances. The number of allowances is going to be 2. Any extra deductions? No. She doesn't have any. Okay? And then again, non-resident. Is she a non-resident? In this case, we entered in a social security number. Yes, you can have an international social security card number, right? Especially for anybody that's traveling here on a visa, you do have a temporary social security number that you can use. Now, what's the difference between that and a green card? Well, a green card means you're applying for a social security, but you don't necessarily have the social security number just yet. So then those numbers do, in fact, have a different number. And if this person is, and you allow individuals who are not American citizen to work for you, then you can go ahead and enter this information here. But in this case, it does not apply, and no, this person is not qualified for this. Okay? And I'm going to click next. So then now this is going to be the list of all the taxes that she's going to be taxed at, and I'm just going to go ahead and click next because I don't want to. Those are all the necessary ones that you need to have. Okay, so once again, we're at this window again. She's married. Okay, how many allowances? She has 2. Extra deductions is 0. So this is for the state of California, because California has different taxes than the federal one. Okay, so you do have to make sure that you know that. Okay, and what are the taxes that she could be taxed at for California? Is just this one right here. Okay. And I can go ahead and click next. Now then here says enter in, okay, additional state taxes, okay. Right now, she's subject to California unemployment and California disability, okay. So again, in the state of California, there are a few extra taxes, so they actually pay into their own unemployment, and they actually pay into California disability. Okay. And then here you go. Is this employee subject to any local taxes? Okay. What are local taxes? So a great example is going to be, for example, San Francisco, right? They have a public transportation, which is that that trolley that goes through the town. That is a public transportation, and that could be considered a local tax that whoever works in San Francisco and lives in San Francisco may have to pay. All right, because again, it's to support the local city, local areas, so on and so forth. Okay, so that's an example of a local tax that you could be taxed for. So in this case, no, she's not subject for any other local taxes. So now we're going to talk about wage plans codes. In this case, she belongs to S. Okay. All right. What are these? Well, in this case, you have a little description here on what you need to know about what these tax codes are. In this case, we're just going to use standard, like we mentioned before, which is a state plan for both unemployment and the disability. Okay. And then I'm going to go ahead and click finish. So those are all the necessary things that you need to know about your employee to set them up. And if you think that was to me very exhausting, but again, that's what you have to do to ensure that when you do have employees, that's how you set them up. Any extra things such as a background check, a fingerprint check, a drug test, those are all going to be extra things that you have to do as your responsibility for the company. Has nothing to do with QuickBooks, okay? So again, whatever standard procedures, measures for you to obtain a new employee, that's on you guys, okay? Now, any questions in regards to setting up an employee?
No. No.
No.
All right, let's go. Yes.